In this video, I want to talk about how to use order blocks in your trading strategy. I know there are a lot of videos in YouTube or in other platforms that explain a lot about order blocks, but in this video I want to just go to the point and explain you how to use order blocks to trade crypto and also legacy markets, because this technique applies on cryptocurrencies, altcoins and Bitcoin, and also on legacy markets. So before jumping into the video, I want to encourage you to follow me on Twitter at trading_soldier, and also to visit my website trading-soldier.com, where you can find a lot of articles that I write. These articles are just the videos that I publish on YouTube or on Rumble, but in a written format, so they are different. But you can read it here in my website, and you can find a lot of value here for free. So okay, before jumping into this strategy and before explaining you how to use the strategy with order blocks in trading Bitcoin, crypto, altcoins, I want to explain you what is an order block. Very simple. I don't want to get very deep on this, but I want to explain you that an order block is just as the name says, a block of orders. So as you know, when you do a large trade with a lot of capital in spot or in contracts or futures contracts, if it is a large position, you cannot execute this position all at once. So you need to place a block of orders to sell or to buy. So this what tells us is that are two types of order blocks. There are bearish order blocks and bullish order blocks. Okay, so there are order blocks that act as resistance in the chart, and also there are order blocks that act as support in the chart, because these order blocks, for example, those that act as support were a big blocks of orders, of buying orders, okay, and those that act as resistance were a lot of selling orders were placed at once, okay? So to use this order block trading strategy, we are going to use TradingView. As you see, I am using the TradingView software, nothing complicated here. And you can see many videos in YouTube that explain you how to, let's say, draw an order block in the chart. So as we know, time is money, and I don't want to waste any time here. So to identify these order blocks, I'm using an indicator, that is this indicator. As you can see here, we type order blocks, okay, and as you see here, we see order block detector by LuxAlgo. You see here, LuxAlgo, order block detector. This is the actual indicator that I have right now charged in my chart. So as you see, as I explained before, there are bullish order blocks. For example, this is a bullish order block. You see, this box here is a bullish order block, because as you see, the price here pumped, retested just at the line of the order block. That's why so precise this indicator, this order block indicator, or this trading strategy, because as you see, the price pump, created the order block, okay, then retested the order block, not pierced it, just at the line, then pump again. So you can, if you miss this enter here, you can re-enter your long position here, okay, putting your stop loss protected by the order block, and then the price reverses, okay. Then after this, the price action revisits again the order block, didn't pierce it, and then reverses to the upside, okay. This is one example on the 5-minute chart of one bullish order block. For example, we are going to search another bearish order block example. For example, we are going to the 30-minute time frame. Before doing this example, I want to tell you that, as you should already know, charts are fractal, and also the order blocks are fractal, okay. So if you find order blocks in the 5-minute chart, they act the same as if you find order blocks in the 30-minute chart, or as if you find order blocks in the 4-hour chart, okay. The only difference is, as you know, the levels of the order blocks, the levels that the order blocks are printing on the chart, gain more strength as higher is the time frame, okay? So if you find a bearish order block, for example here in the 4-hour chart, okay, this is a bearish order block because it's above of the price, okay, the price is below the order block. As you see here, this line, we are going to, this is a rectangle that I just draw, but this is the actual order block, okay? We're going to also delete this, okay? So we only leave the indicator, okay? I'm going to remove the drawings, okay? So this is a bearish order block, and in the 4-hour chart, so we assume that this 4-hour chart bearish order block has more strength in the $35,000 area than if I find this order block in the 1-hour chart. Okay, for example, here in the 1-hour chart, I don't find this, but I find here one at the $34,000. Okay, so for example, right now, if we go to the Bitcoin price right now, we see that when the price last week created this wick to the upside to $31,600, okay, then large selling pressure was added to the market, okay, large sell orders were executed here, so this created this bearish order block. Right now this order block has been acting as resistance, you know, one time it's been tested, the price goes down again. Right now the price is acting again as resistance by this bearish order block, okay. The price rejected, again the price tries to retest this order block, it failed, and now for the last time is trying to reclaim this level, but the order block is acting always as resistance, okay, because it's a bearish order block. You know, the price comes here, large selling pressure enters the market, it creates this order block that is printed in the 1-hour time frame, and if we switch to the 4-hour, for example, we find it too, the same order block. This where we find a lot of order blocks in different time frames, we need to think that this order block has a higher quality, okay? And the higher the time frame, the higher is the strength of this order block. The higher is the probability that this order block will be respected or will act as resistance or as support, okay? So what you need to do in order to trade these order blocks, what you need to do in order to take advantage of these order blocks to trade the chart in futures, in perps, or also in spot. So it's very simple. For example, we are going to the 50-minute time frame to change, and for example, when the price you see that creates a bullish order block like right here, okay, I will place a buy order right here. As I said before, this is the bullish order block. In the beginning of the line, I will place a buy order, okay, is in contracts, perps, or spot, and I'm going to protect my stop loss with the last line of the order block, okay. You see, if I delete this, okay, this is the last line of the order block, so my stop loss is protected below the last line of the order block, okay. So if the price reverses, we have all this order block, let's say, protecting my stop loss, okay. So as I said before, the bullish order block is a price level that the price action is likely to reverse, has a high probability of reversing, testing it and reversing, okay. So as you see here, the price action did exactly this right now. I'm not searching one particular case, okay. I'm searching the last day of price action, okay. This video is recorded on the 3rd of July. You see that this price action occurred yesterday on the 2nd of July, okay. So I'm not searching one very particular case in the chart that will confirm what I'm saying. This is real data that you can see right now, so this proves the veracity of this trading strategy, okay. And as you see here, for the bearish order block, for example, if I had to enter short here, I will place, right now the price action is piercing the order block, but as you see, here's find the resistance, because as you see the price action is having wicks to the downside. This tells us that the price is finding sell orders or supply at this zone, and the order block is not invalidated, because this indicator that I tell you to use, the order block by Lux Algo, what it does is when the order block is pierced, these order blocks disappear from the chart. So you don't have to worry about the old order blocks. The old order blocks that were invalidated are removed from the chart, so you only have in the chart the fresh, let's say the fresh order blocks that will act as resistance or support from now on, okay? So right now, if I had to place a short here, I will place it, for example, right there at the middle of the order block. I will place my stop loss at the end of the order block, so my stop loss is being hit when the order block is invalidated, okay? Let's see right now in live, in the 50-minute time frame, a bullish order block is created, okay? So this example, you see the price action. Now it's likely that the price action test here at the first line of the order block. If not, the second line that will cause a reaction in the price will be the middle line, and if not, the last resort that we have to find a reaction on the price is the last line of the order block. As you see, it's a rectangle. We have the first line, the last line, and the middle line and the last line. Here is the same, okay? As you see right now on live, the price is being rejected, but it's finding support here, okay? You see, live, the price comes down, okay? Then now it's piercing, so the likely outcome is the price or is being rejected here and pumps, and this way inactivates this order block, okay? Or this order block is acting as resistance and will go back maybe to this order block to find again supply and maybe try to invalidate this bearish order block, okay? But as you see here, in real time, this bullish order block that is found here, that is created here right now, live, when I was recording this video, is acting as support, okay? Because price here is holding, okay? So maybe here you don't have to enter short, because maybe here the price finds demand and pumps again and invalidated this order block that is created the week before, okay? Because order blocks, as you know, are just levels with high probability of the price reversing to the opposite side where the order block is created. But as you know, these lines, these levels, sometime will be pierced, okay? There's not right in stone. These are not permanent levels. These are high probability levels where the price will be rejected and find supply or demand at these levels, okay? This is just an indicator, as I said, and this indicator is created by price action, okay? Order blocks are created by price action, so for an order block to be created is based on the price action that the chart is printing. So to trade correctly, before you need to understand price action and combine this price action knowledge that you have with the order block trading strategy that I just explained you, okay? But you can use this strategy in any time frame, because as you know, charts are fractal. The only thing that you need to have in mind is that the higher the time frame, the higher is the probability that this order block will defend, let's say, the level in where is printed this order block in the chart, and the lower the time frame, the higher probability that this order block is going to be invalidated in the short term, okay? So if we go to the 1 day time frame, okay, the order blocks that I printed here, for example, this bullish order block, are very likely to hold the price, okay? This bullish order block here at $29,500, okay, here is very likely and indeed is holding the price, okay? If you see here, the price tested, rejected, go up, price tested, rejected, go up, because in the daily time frame, the quality of this order block is much better than if we go to the 1 minute time frame or other time frames, lower time frames, okay, as I explained before. So this is pretty straightforward. This is very easy, in my opinion, this trading strategy. You can apply it to altcoins. You can apply it to all altcoins with high volume. I don't trade, and I don't encourage you to trade low volume altcoins or low volume meme coins, because these meme coins have very low supply, okay, or very low liquidity, let's say, and they are very prone to have, let's say, price manipulation or wicks, because the low liquidity, the market, you know, the price finds liquidity, and maybe they can trigger your stop losses or trick the order blocks that are created in the chart, because there are only one or two actors that are playing in trading these meme coins with low volume. So I encourage you to stay with the top 500 coins to use this strategy, okay? And to finish this video, to wrap up this video, as you see here right now, where we are in the same time frame, okay, the 50 minutes time frame, you see that the price indeed is being rejected from the order block, is absorbing, so it's finding demand here, okay, is piercing the order block, but it's finding demand. And now I'm going to make a prediction that I'm not going to record more the video, but as you see, now it's finding a good weak rejection here. So the price action is telling me that here there are a lot of buy orders sitting in this order block that is being created, and now it's likely the price is very likely to pump and invalidate this big order block that we had the last week, okay, to find new liquidity levels at higher prices, okay? So if you ask me right now, after this bullish rejection, after this bullish weak pin bar, okay, now is going back down, but I will place a long, okay, I will place a long here, for example. I will protect my stop loss here, okay, for example, and I will target the invalidation of this order block, okay? You can trade also this way, but as I said before, you can use order blocks to help you identify levels of supply and demand where a lot of selling orders were happening in the past, and also where a lot of buy orders happened in the past. But you need to combine order blocks with price action, okay? So having said that, I hope you find this trading strategy of order blocks very viable in your trading. I remember you to follow me on Twitter at trading_soldier, where I post daily updates of my views on the market, or also my trades, my setups. And also I encourage you to visit my website trading-soldier.com, where you can find all the articles that I post, that, as I said before, are just the videos that I post on YouTube or in Rumble. But here you can find with images, you can here also find the video, the YouTube video, but here you can read this content in a written format. I also post images, and you can support me here in my social media accounts, and also with your trading media subscription with my referral link, and also with your trading live subscription with my referral link. Okay, so I hope you find this video very valuable for you. I encourage you to subscribe to my YouTube channel, also to subscribe to my Rumble channel, and we see you on the next video.